Hello guys,
Hi.
welcome back to yet another Thursday night. So I think we are still on our F&B company month or week, I think month. But we have been receiving quite a lot of queries to cover a few more tech companies. Yeah, we'll definitely do that. Maybe 2 weeks time. Yeah. Next week will still be tentatively will still be one more F&B companies, but the week after it would be a tech company that has been on the waiting list for quite some time already, and we are also quite excited to touch base on that company as well. But let's come back to today's key company, friend Kawan. So I don't know about you guys, but let me know in the comment section any one of you who actually bought Kawan's products and cook roti during the circuit breaker or the MCO period. But or Sean, did you buy any frozen dough products from Kawan or its competitors and cook during circuit breaker or MCO?
Yeah, recently I did buy the frozen roti canai or roti prata, if you want to call it. Yeah.
Have you tried it? Have you cooked it up? And what's your verdict versus the actual that you get from the mama?
I think it's actually quite comparable. It's quite easy to do. Just put it on the pan, clip it for 2 minutes, and that's done. Yeah.
Okay. What about you, Junbei?
No lah, I don't really like frozen food personally, but usually do it if there's any hot pot. So I usually won't go for their prata original product. I will go for those they're suitable for hot pot lah. But
I see.
mainly, I think later when we share, you guys will know what is the key products. Original is definitely one of the biggest one in their entire offerings, but they have some other offering as well. So probably I think we can start and then show them what actually what is the product they are selling.
Okay. So without further ado, let's proceed. So as always, the disclaimer. Please do not take this as a buy or call, buy or sell indication. It's just purely for educational purposes and also sharing purposes. But if you do think that the company has its prospects, feel free to further study, do your due diligence, and buy it when you think the price is right after you do all your assessments. But today we're just doing a brief sharing and just our thoughts lah. So this is the new plant in Pulau Indah. If you have been to the area, or if you are working in Pulau Indah, you would have passed by their new plant. I think they just move over to this plant quite new. I think recently only two to 3 years time. So previously they had plants in other places around Malaysia. Then they decided to consolidate everything. They put out a new plant in Pulau Indah, and then they closed the existing plants. So everything now is just based solely manufactured from the Pulau Indah plant. So there you have it, Kawan Food. Brief introduction. So when we talk about Kawan Food, maybe for those who haven't studied their business before, you might be thinking, okay, I do know about Kawan Food. I buy their products, or I see their products on all the supermarkets, be it Giant, Aeon, or the grocery stores that you frequently go. But Kawan actually does do a lot of exporting as well. So they do not just produce for Malaysia people consumption. They also sell it to other countries. Later we will touch base on where. So, and it's just not like 2 to 3 countries. It's 42 countries around the world. And this company has been around since 1960, so probably the same age as my father. And it got listed in Bursa Malaysia in 2005. So you do the maths, it's roughly 15 years ever since the company got listed. But in terms of operating history, it's close to 70. 60 plus. Yeah, 60 plus. So yeah, I think here you have it. You might already see a few familiar products if you are someone who frequently goes to the groceries and you look at the shopping aisles, especially the frozen aisle section. But I would like to get maybe Sean's opinion. Is there any products that you are surprised to see? I didn't know that they did this one as well, because all this while Kawan is always all about the prata and also all the dough related stuff. But like for example, I only knew they did roti prata and also chapati, but I never knew that other stuff exist. But what are your thoughts when you look at the total catalog now?
No, I always recognize Kawan food as dough related, as you say. So that will include naan, roti, and those puff pastry, tortilla kind of stuff. Yeah. So this is how I recognize Kawan food.
Cool. So apparently they do sell a lot of things, but this one is also a bit special. Chun Ping, have you ever come across this brand, and did you actually know that KG Pastry actually is a sub brand of Kawan, but it's more towards the Chinese kind of dough products?
To be honest, no, until I studied their annual reports and so on. And apparently, I think the Chinese name should be something, I forgot the actual name already, but it
Hongguan, I think.
It has no very minimum relation to Kawan food. So you can't really relate. But then you'll be surprised all these things actually play a big part in their export business. So this is the photo shown here is just a big part of it, but they also sell wonton, the dumpling skin, spring roll, and so on. So it's beyond that.
So yeah, it's really interesting that this kind of products that they have here, usually for people like me who sometimes cannot get the chance to celebrate all those Chinese festivals back home. So yeah, sometimes I have to buy frozen dough and heat it up and stuff. So pretty much or someone who really likes to eat glutinous rice balls. So yeah, for no other reasons lah. So yeah, from here you can see that they actually do evolve from the typical frozen kind of products. Here you have passion bake, where they are into the garlic bread, pita bread, and pita wholemeal kind of variant for the pita. And you also have wheat. Wheat is actually making mock meat, fake meat, by using vegetable or soy protein. So here you can see they sell satay wheat bites, they sell BBQ mixed veggie bites. So it's not animal based protein, it's basically soy based protein, and it's vegetarian friendly or vegan. I think vegetarian friendly as well. So yeah, I think one of the special things is that they really do not just focus on the traditional or the very straightforward dough kind of products. They also try to offer specialty products, in this case mock meat under the wheat brand as well. So apart from having their brands targeted to the Chinese consumers, I think they also try to address the products or the brand perspective of it towards the Indians and also the Malay customers, because I don't know for what reason, sometimes we tend to buy stuff when we are associated with the brand. So this brand, Aman brand, is also part of the Kawan food portfolio. So basically, if you are more accustomed to the brands under Aman, then you probably would have picked up products. It's the same products. Basically, they just market it under a different brand for a different kind of image. So you have samosa brand, you have puff pastry, you also have prata, fatira, as all the other kind of dough products that they sell also. So it's just branding perspective. So when you look at this global map and you see all the red dots and also the green shaded areas, what struck your mind? Did you realize that Kawan food can be so big, Chubeng?
No, I think when I first when I make my first look at Kawan, I'll see this is just frozen food, and then it's
Yep.
Asian food. So I think nothing special because we're living in this country. I think food choice is a lot, but then it makes a lot of sense when you see their reporting figures saying a lot of it come from North Americas or even South Americas. So all these things make sense because I would say Asian food should be scarce thing over there, and I think they make a very right choice because it has been one of the leading exporter in Malaysia. But beside Malaysia, they also have another plant in China, which is
Yep.
doing the manufacturing part. Of course, the China part is mainly to support within China itself and also to some of the neighboring countries, but majority still come from Malaysia.
Yep. So I think just now you touched on it. This is a company that started off its roots in Malaysia, but also grew to become a major export player for the frozen dough or for the frozen food segment. So here you have the numbers. Particularly, you can see Malaysia contributing around 40% in 2018 and 2019. It also is roughly around that. 40% of their sales come from Malaysia, and the rest of it is actually export. So we are looking at a company that relies 60% of its sales from export. So, Sean, do you think this is a good company? Have business locally, but also sell all over the world and have a 60% exposure internationally?
Well, firstly, I think as we've shown, right, Jupan, there are a lot of different product offering, from the roti to the Chinese dessert kind of pastry, and to the plant-based product. So there is a variety that caters for different appetite across the world. And also in Malaysia, so that's good for the company to have such diversification, and I think 40-60 it's not quite a bad ratio, if you think about it. So there are some companies that we covered before that are 95% export, and that is quite risky because it can flip both sides, right? Based on exchange rate and all that. But otherwise, 40-60 in different countries will be quite okay actually.
And I think if you look deeper into the numbers, you actually see a little bit of positive signs. So you can see Malaysia, the sales grew from 2018 to 2019, grew by around 3 million. North America also grew. Rest of Asia also grew. Europe also grew. So you are looking at a company which is still growing around the world, not just specific regions, but overall the numbers are growing. Probably you can be a little bit, nitpicky if you say that the Oceania region sales has gone down a little bit. But overall, the key big regions like North America, rest of Asia, and Europe, you are seeing a little bit of growth there, and that's a good thing, because ultimately, for company to become bigger, or to prove that they are growing, the top line or the revenue is actually the key indicator. So that was 2018, 2019 comparison. Now we are we are already entering the third quarter of the year already, and we are nearing December. So how has the company fared, especially during second half of 2020, where we are still in the midst of a pandemic? You can see here, if you compare to second half of 2020 versus 2019, Malaysia sales grew, and it grew a lot. You can see from 45 million up to 62 million this year. So it's evident to say that probably a lot of Malaysians are cooking at home, and some of you guys have been buying Kawan food, frozen dough products, and cooking at home during the tough lockdown period. Surprisingly, you can also see that North America is also growing as well. Rest of Asia, you see a slight contraction, but other regions like Oceania is suddenly also bumped up, and Africa also bumped up. So you're look at the total second half 2020 versus second half of 2019, I would say 30% growth in terms of revenue. So this is a company that has proven that business is pretty much recession proof, pandemic proof. People still need to eat regardless of pandemic, and let's be honest, frozen products ain't that expensive. So which is probably why there was a sales uptick during the tough second half or the early part of the year when the pandemic was still at the height. So here we have the export market, which are the countries that Kawan Food is very dependent on, and what are the key products. Maybe Chun Bing, you want to take on this one?
Yeah, I think we split into two parts. So one is the type of products when we talk about the export market. That's why we are saying prata should be one of the biggest contributor in terms of sales, as they managed to conquer the US market with these products. So be it prata, chapatis, but I would say spring roll, all those things is slightly less. It's mainly prata and chapatis, and then majority come from US, and then the remaining region is picking up. So US is definitely the biggest contributor, and then that's why one of the things that we should also take a little bit deeper to when we analyze these companies is the impact of USD because ultimately yes, two sides One of it is if ringgit got weakened, then the product become cheaper at the end, then they can earn a lot. But if USD rose also, they also can have a short-term gain. So I think we can closely monitor this thing. It will contribute quite it contribute quite a big thing in terms of sales for when we talk about the export market.
Yeah, true. So next, we also talk about how Kawan Food is a company that is innovative. They don't just stay within the frozen dough segments. They also try to come up with new products and try to come up with healthy variants also. Just now we also saw that they have a whole meal, a high grain kind of variant for the rotis as well. So yeah, here you can see the sales contribution in Malaysia. So you can see that surprisingly in Malaysia, a lot of people actually go for their spring roll pastry versus the prata. So export market, yes, prata is the key contributor, but comes to Malaysia market or Malaysia sales, spring roll is actually one of the key contributor in terms of sale, which kind of makes sense because Chinese, we love spring roll pastries. I think Malays also love it. Indian, I'm not so sure whether you guys use spring roll pastry in baking or making your cookies, or Deepawali is around the corner. So, but I am aware that Chinese and Malays, we sometimes use a lot of spring roll pastries or or pian or whatsoever. But the second one will be frozen vegetables. So you can see that this company is really diversifying a lot and putting a lot of effort from growing from the original roti products into other subsegments and other growing kind of products, which may put it at an advantage if you compare with other companies who are in a frozen food business. So channel-wise, they are in traditional retailers. You can find them in small sundry shops that has refrigerator facilities. You can find them in the big swanky hypermarkets, supermarkets. Horeca, yeah, basically if you go to eat at a hotel or restaurant, chances are they also don't make their popiah skin, they don't make the spring roll skin. They will actually buy it ready-made from companies like Kawan. And top retailers like Giant, EconSafe, Mydin as well. You can easily find your products there. And of course, now that we are venturing into e-commerce, you can also find their products listed in Lazada, Shopee, and Potboy. So this is a company that not only puts initiative into diversifying their available products, they are also very well diversified when it comes to their sales channel. So we talk about Malaysia operations and how the Malaysia operations actually support the export business. Here, we actually highlight or drill down into the China component because they do have a China plant, mainly for China market and also for the surrounding markets in China. So yeah, Sean, what do you think about it when you look at the China sales contribution and also how the China plant supports the Kawan food entire business?
No, I'm actually surprised to see that more than 50% of it comes from the spring roll pastry. I would have thought that in China there would be a lot more competitor or manufacturers when it comes to that. So yeah, it's a relatively small percentage for the roti canai and roti prata as well. But considering how many Chinese nationals have been traveling to both Malaysia and Singapore, getting exposure to the food in Malaysia and Singapore, I hope that moving forward there will be a higher percentage of roti prata from there. Yeah. So when it comes to their operations, naturally, when you have a factory there, you produce as much for your domestic sales, and whatever you have remaining, naturally you will export it, right? So you don't want to leave it in the country. I can't say much whether this is a good ratio, but otherwise, if the factory is well utilized, then I think that's good enough.
Cool. So after we go through the entire business model, we go through the sales figures and drill down. Next, automatically we'll be looking at the profit and loss. Has this company been, growing? Has this company been earning money? And is this company lucrative enough for shareholders to actually keep an eye on? So you can see here, straightforward, ever since 2013 up to now, second quarter of 2020, this company looks like it is on a growing momentum. Every year they seems to be able to grow their top line, which means business is indeed doing better and better year in, year out. But if you look at the profit and loss, doesn't paint the same picture. You can see the profit actually go up and then it just came down. But 2020 looks like a year where they could be making better profits compared to 2019. But what happened, Chun-Bing? Why did the company manage to grow their top line, manage to grow their revenue unstoppable even during the COVID crisis, but the profit just doesn't seem to tag along?
No, I think it's a couple of reasons, and then he also on a very consistent trend where the sales continue to grow bigger and bigger, but then the profit margin become slimmer. So I think we should take a deeper look on the huge drop from 11.7 to 5.5, where we pointed as one. I think this is not a dangerous sign because it's mainly used for development of their Pulau Indah facility, where they claim to be able to increase their efficiency. And then so happened that after they did that, actually MCO came in, all those things, and then a lot of people purchased their product. But the worrying sign is until now, right, 2 quarters, they only bounced back to 11.6. I mean, in terms of profit margins. So what is actually stated by them in the annual report might need more years to prove it. But if you are looking at the long-term perspective, maybe these are the one of the few companies that will benefit from pandemic because they are frozen food provider, and then their operation efficiency has been improved right before this happened. So all this is positive sign, but then we should closely monitor if, let's say, during this pandemic, people start to buy a lot of frozen food, but it cannot go back up to, let's say, 13 or 14% of the profit margin. That might be a worrying sign. But for now, it's just about that because the facilities deployed not long, so it definitely will take some time to recover.
Okay, so yeah, we managed to check out the worrying dropping net profit margin. So if it's just based on depreciation and it's a new plant and they haven't managed to boost up their sales revenue back then, and they get to recognize more depreciation cost that eats into the net profit fair enough. This is a company where you should, put in a watch list and then just monitor and to see whether if the trend continues or not. So supposedly this year looks like to be a good year, and you shouldn't be seeing the same recent quote at the end of the financial year when another 2 quarters pass, and then you look back at what the management say in the next annual report. You shouldn't be catching this kind of reason there. The management should be promising something a bit more rosy. Basically, sales have grown even during the tough times. So what is the management plan going forward to actually boost the profit margin to previous year levels of 13 to 14 and 15% and above? So this is the financial ratio. We got it from the 2019 annual report. So I think they are very generous in sharing their information. So you can see here, this is a company in terms of what growth, in terms of cash ratio, it's always on a positive part. So what does the number say to you, Sean? And what do you like about the ratio, and maybe what do you not like about the ratio?
Yeah, on first glance, right, you will see that revenue growth percentage is decreasing slightly and then starting to pick up in 2019. Well, I guess you can also attribute that to starting from a very low base, because if you remember the earlier numbers, now they are 200 plus million, but just 5 years ago, they are slightly more than 150 million. So percentage can be a bit tricky sometimes. So maybe, we can also look at absolute value. And then maybe the next thing to look out or pick out is the earnings per share. As you shown before also, the net profit has been dropping. So again, it will be reflected on the earnings per share dropping as well. So these are the two to pick up. Yeah.
Okay. So what do you like about the ratios? What are the ratios that make you say, okay, this is good? And what are the ratios that you'll be like, this needs to be improved, or I don't like this number?
Well, yeah. So another thing that maybe is good for the company is the current ratio. So for those who are not familiar with current ratio, it's well, mathematically you're taking current asset over liability. It's just to show your liquidity in the next 12 months. This means that if you liquidate all your assets today, you can pay 3.5 times more for all your liabilities or debts. Yeah. And then I guess another ratio that people normally look at is PE ratio, price to earnings. So it's sort of a way to see how expensive the stocks are. So if I give an example, when we look at Top Glove and Hartalega during the high times, during the last couple of months, it went up to more than 100 times. It means that for every dollar the company earns, you're willing to pay 100 times more. So, but for Kawan Food, the latest 2019 is 41 times, which means that for every dollar that Kawan Food earns, people are willing to pay 41 times more. Yeah. But PE ratio by itself, maybe it's not the most indicative. So you always put in that growth aspect there. So PE over growth. But overall, if you take 41 divide by 7.05 in 2019, that is still relatively high, which means that, the stock is relatively expensive. Do you agree?
Okay. Zhenbing, what are your thoughts? Do you think Kawan Food is expensive at 40 times plus PE?
When I first look, I think I would say for frozen food, we normal traditional kind of business model, even though they play a very big part in an export market, 30 and above is considered quite expensive, in my opinion. But then there's always something where you should look from a trend perspective. So if you are sharp enough to actually buy when you think global pandemic will actually stimulate more work from home cultures, then those time is the right time, I would say. But now it's sort of already reflected back on what they're supposed to be. Using two key performance. Now, one is because more people buy, and secondly is because their efficiency increase. And then the next one, if you wanted to pursue with this current price, and then you are expecting with some gain, then you will need to see whether the efficiency improvement, whether it's really something significant in the next few quarters. But for now, right, I think nothing much to worry, because long term wise, frozen food should be the trend in a way. Last time I won't buy like I won't buy frozen food. I mean, to be honest, lah. But I think now it seems like frozen food is one of the good way to grab a quick bites, and sometimes it's even more delicious than the one that you get from outside. So it's definitely something that people will try to get more and more. Maybe this pandemic just help to speed up the adoption rates.
Okay. So yeah, I don't know about the audience. Do you guys think that frozen food can be delicious than the actual ones that you get? Maybe frozen roti tastes better than the, mamak. Let us know in the comment section. And yeah, we'll see whether if Chun Bing's point of view makes sense or not. Personally, I think it still goes down to how the business actually manage their balance sheet, how the business actually operates the business. So I'll reserve my comments when we end the slides. But yeah, let's go to one of the aspects that I also look as well, which is the balance sheet. So you can see here, surprisingly, assets has been always on the top there. And yeah, we just talk about the company expanded, right? They moved into a new plant, new facility in Pulau Indah. And usually, if you have been following us for quite some time, then you see that most of the companies that we covered, they actually also go on a capex spree. You'll notice that the assets jump very high because you buy a new plant, you set up a new plant, and you recognize the assets on your balance sheet. There will be a significant jump in the blue column, which represents the assets portion. But you can see here, actually, the assets portion stayed relatively flat, even though Kawan Food say that, okay, I'm going to a bigger plant, I'm going to a, plant that produces more products in terms of capacity. It's a new plant, but your assets never grow. So moving on to the next question. So how do you make the new plant? How do you buy a new plant, right? Through borrowings or whatsoever. So you look at there, the liabilities, yeah, relatively flat for 2017 to 2019, 59 million-ish. Q2, it goes up to 71. I presume because times were a little bit tough and they needed a little bit of money to get the operating portion smoothened out. And you look at the debt, actually, 24 million back in 2017, went down to 16 million, and then went down even further to 15.76 million. And as of Q2 2020, it dropped even further. So you were noticing that the company is actually reducing the debt. So the liabilities may not, or confirm is not coming from borrowings. It could be in terms of payables to its suppliers. So they are managing to get a little bit of leeway when it comes to paying back their payables to their suppliers. But in terms of debts, they are paid down pretty much. And you look at the cash and cash equivalent latest year, 67.98 million. So this company can easily pay off that 14.27 million of debt and become totally debt-free. And the equity portion is the one that is also growing in tandem with the assets, which is from 308 million all the way up to 333 million. So what does this tell you? Very simple. This company, yes, they made a new factory, they moved into a new factory, strengthier factory, bigger factory, but not via debt, not via borrowing. This is a company which earns money from the business. The money becomes your equity, your retained earning in the form of cash. And once the company has enough cash, the company just spends the cash, buy land, build out a new factory, and buy new equipment. That's why the assets stayed flat. You didn't see a sudden jump in terms of the debt. You didn't see a sudden jump in terms of the assets because all the cash was there. It just converted from cash into hard asset, into a tangible building. So this is a company that runs its business with relatively low gearing for a manufacturing company. Impressive. So next, you can see here the cash flow statement actually spills up all the secrets of the company. 2017, 2018, 2019, you can see huge sums of volumes of money actually going to partially repay the investment portion, which is the capex of the company. Blue portion of it is showing that the company is still very cash flow generative. Business is good. They not only grow the top line, depreciation is bad, but cash flow is positive and on an increasing trend. And you can see that apart from 2017, where they actually spent the largest portion when it comes to doing their capex and moving into a new plant, 2019 and 20 trailing 12 months, you can see that the company has turned free cash flow. So this is a company cash generative. Management reinvest the cash well to grow the business, and this is not a company that would run into any liquidity issues or cannot repay back their loan. So pandemic proof and operating wise solid. So when we talk about a company that is very good in the business, cash flow generative, and very smart in growing the business and managing the cash flow, some investors would want to look at the dividend portion of it. Yeah, okay, business is good. So what's in for me? And this is the dividend chart of Kawan Food for the past 10 years or 11 years. So John, is this good? Is this lucrative for an for a dividend investor? Yeah, on mute, Sean.
Sorry, yeah. So I think for dividend, it's always important to look at the dividend yield instead of just the dividend declared. So for instance, today Kawan Food is $2.45. So if you only have 2.5 cents dividend, so this means that it's just slightly more than 1% if we calculate like that, right? So dividend yield is just more than 1%. Then if you go for other stocks, maybe even like banking stocks, which you're very familiar, Jupan, the dividend is much higher than this 1%. Correct? Yeah.
Yep.
Even fixed deposit will be higher than 1% actually.
Yeah, I think you have a very solid point there. And yeah, probably if you are a dividend investor, this wouldn't be your cup of tea. Pretty flat, pretty much stable, I would guess. And the company, if the company continues their current practice, even if they want to build another plant, chances are they might also do the same thing. They will save up the money. You see the cash portion is so big, right? They never pay you with the dividend. So they will save it up. And then when the time is right and they think that this money is well spent into building another factory, then the same process or the same actions will actually continue. This is how we actually track the behavior of how the management run the company. So it wouldn't be your cup of tea if you want to invest it for the sake of dividends, even though it's relatively a good business. So director shareholding, Chun Bing, anything that caught your mind or your eyes when you actually see or read through the director shareholdings here?
No, I would say it's quite straightforward, like a lot of other business. And then this is just the few key guys that mainly from this Gun family. And by default, you would think the second one should be the wife lah. So it's quite typical. It's quite typical on how all these things work. But then of course, one thing to take note is they didn't have majority control in a way. The owner themselves. So there is also a check and balance in a way for when we talk about this. But if you talk about, I think Mr. DIY and whatnot, the family itself easily more than 50%, most of the case, but not for Kawan Food.
So yeah, I think we talk about top shareholders. So now here is a deeper breakdown of the top shareholders of Kawan Food. So you can see here at the top is Mr. Gan, the founder. And second is Navi Foundation. So this one I think is a very special case. So if not mistaken, right, Navi Foundation is the company of this guy, number 4 here. So Mr. Naresh Chandra is actually one of the directors of the company. Doesn't relate to the Gan family, but I think he has been I think he has some very close business relationship, because this guy, I think he's a British, but he's happily settling down in Malaysia, and he has a lot of food companies, resorts also, I think, in the UK and other parts of the world. So what I think he does now is actually he gets stocks from Kawan Food, and then he distributes it to countries like in the UK.
Yeah,
so
but I think also one thing to share, I think you go back to the previous slide.
Yep.
Then you will try to think who is the one run the company. Apparently, it's not the Gan family anymore, in a way. So the guy who ran the company is actually Timothy Tan at row number 5. So who is this guy? Basically, is her daughter's husband, and I think it's quite positive in a way. Usually they will give to the son or whatnot, but this one is they give to the son-in-law. But of course, still related in a way. But and it's kind of reflective on the shareholding lah. Basically, this guy just run the operation like a CEO, but he didn't own any shareholdings. But all in all, right, you can see this won't have a lot of personal agenda in a way, because it's quite independent by different parties. Including one of the biggest shareholder is Naresh Chandra, right? So the guy also owned quite a big chunk of the thing. So this is, I think, it's quite positive, in my opinion. If you talk about director shareholding compared to a lot of other companies.
Yep. So if you really, put Naresh Chandra at the same side as the Gan family, basically, if you add all the numbers up, 22%, 19%, and number 3, you have Mr. Gan Tiam Hock, which is Mr. Gan Tiam Chai's brother. I think they own how much? 30, 40, close to 50. So then the mathematics makes sense. So you are looking at a company where, Mr. Naresh Chandra is not part of the family, but I think he also have vested interests, the same as Mr. Gan and his family. So this company will not also have any risk of hostile takeover. So basically, hostile takeover is where, someone bad intentions, they want to buy our company, then you just nibble the company shares from the open market. And once they hit a certain percentage, then they will just, come up with a statement, okay, I'm going to buy over company X, Y, Z, Berhad. And if it's favorable, then share price go up, but usually it's unfavorable, and that is where you see your share price of the company you invested go down. So based on that, no risk of hostile takeover. So I think Kawan Food, after we go through most of the aspects, it's a well-run company. It's in a pandemic recession-proof business. There are a lot of upsides to the company, and I think growth can only continue. Where else, how they actually play around with the profit, that one is up to the management controlling or operating the company. But what are the prospects that you think could actually bring the company higher, Junbing?
Yeah, I think we have been sharing this, and it also proven that during the pandemic, their sales actually pick up hand in hand with the automation that they've deployed in the Pulau Indah facilities. So it make, if you compare the first 6 months of this financial year versus the previous one, I think it's easily a 30% jump. So it's the result of these two. And of course, they didn't stop themselves by doing all these things through distributor network, which is going to the hotels, shopping mall, and so on. They also start to go into e-commerce, which I think all this is in line together to reflect their sales figure lately. Maybe we should look at what is the risk. I mean, ultimately, all these things, it seems like very positive sign. But then, what is the actual risk behind them? Okay, why I wanted to bring this out is because even though it's more efficient, but it didn't reflect like a lot. It's because their production capacity technically still higher than the demand. Technically, they haven't fulfilled it. good and bad, meaning they have room to grow further, provided the sales can pick up. If they didn't pick up, then this Pulau Indah can become a liability to them. But of course, like what Jupan has mentioned, this guy didn't raise fund to build a new plant, so it's still okay. But the problem is maybe they cannot maximize what is their investment that make their figure look bad in the past 2-3 years. So this is one of the things that we should continue to monitor. And then I think the remaining one should be quite straightforward. I think overall economy is quite bad in a way, especially Malaysia. But then this guy is not impacted by Malaysia. I think lately US presidential election, a lot of up and down. I think now it's on the uptrend again in a way. So it's very unpredictable. But I would say frozen food is technically a cheaper option. And it's convenient if you talk about time values. So it definitely will be will play an important role in future. So I would say maybe last time 5 out of 10 can cook. Maybe now it's only 3 out of 10 can cook. So all these things, it definitely will contribute up. I will leave the last one to Jupan or Sean for these competitors.
But before that, maybe I'll get Sean's opinion. Do you think that the risk or the prospects of Kawan Food, which one actually has a stronger catalyst? So based on the prospects and based on the risk, you think that the prospects actually outweighs the risk, or it's the other way around?
I think for this instance, my personal opinion is the prospect looks more promising compared to the risk. Again, I say I don't know what is the utilization of the factory or how much more room they can supply compared to the existing demand, but you can see that they are probably going towards the steps of digitalizing the way that they are selling through e-commerce. So a lot of us buy food online nowadays, and that is probably a good thing to have better reach. But at the same time, selling through retailers like Giant and NSK, normally these big retailers will press your prices down a lot, so that will affect profitability and margin as well. So if you manage to sell more online, yes, you do have to pay Lazada and Shopee, but probably the commission so-called will be much less compared to the prices that are being pressed by big retailers.
Cool. So lastly, let me talk about on the competition. So if you look at Kawan Food's product portfolio, and if you really go walk around in a supermarket, especially the frozen section, you notice that they command quite a bit of the shelf space. Basically, they have multiple brands under their portfolio, but you also notice that they are not alone in this shelf space. There are also plenty of frozen dough products players in this small niche segment. One of it is a Singaporean company. It's not listed, but it's quite big in Singapore. So the owner is actually known as the Popiah King. They have a plant in Singapore, and this is also a brand that I came across not only in Malaysia. They also do sell a lot they also not only sell in Singapore because it's a Singaporean company, but they also do a bit of their sales as well in Malaysia. So you are competing with also a relatively big competitor. Just because Deja is not listed doesn't mean that you can totally discredit the potential threat that it can pose to companies like Kawan Berhad. But nevertheless, I probably would agree with Sean. The prospect outweighs the risk because the total market share is big enough to sustain two frozen food manufacturers. But I think one of the risks that I actually chance upon when I talk about it, discussed it with one of my friends last week, is that frozen food, especially in Malaysia, there's this kind of threat because the kind of products that Kawan is producing is something maybe you can see, sales grew in Malaysia during the second half of first half of the 2020 because pandemic made everyone to cook at home. But moving forward, when the economy slowly reopens, would Malaysians continue taking their roti by buying frozen food and cooking it at home, or will they hang out at the mamak section? So this is a question maybe you want to ask yourself. Frozen dough products like roti is low margin product. Even the mamak, they don't buy from Kawan and then they make the frozen version for you. They make it from scratch. So basically, the mamak, they already have the control in terms of the raw material pricings, and it would be stupid to actually buy the frozen one and make the frozen one and sell it, because their purchasing power, they can buy cheaper flour, they can buy cheaper raw materials, and then they can make the roti price per piece in terms of cost cheaper than the frozen version. So you're looking at a company that potentially can survive by selling to end customers like you and me, but it can never, or find it very hard to penetrate into the mamak store and becoming a mamak store supplier. So think about that when you want to do a more bullish case study or justification when buying a company like Kawan Food, which is trading at today 40 times PE. So I think it comes down to my opinion on the valuation part of Kawan Food. I would say yes, it's a well-run company. Everything looks spotless in terms of the business, in terms of how it's run, in terms of how the cash is also managed. Probably I would be a little bit skeptical on how they run the cash portion, because basically they will just earn money and then the cash just gets accumulating in the bank account. And once there's a need to grow, only they will pump the money out and buy new land and build new factory. As a investor who might be looking at dividends, you definitely will not be getting much from Kawan Food unless they change their dividend policy. You can see that there's no policy that they will pay out how many percent of it. So yeah, they can stay at 2.5 cents forever until the cash pile actually goes so much that they don't need, only they pay out one-off special dividend. The dividend view, paltry 1%. I think, Sean, you already highlight that this is not an amount a dividend investor would be looking at, even though business can continue growing, but your dividend will be kept at that particular level, because this is just how the management run the company. They are not a generous kind of dividend payer. Yeah, for me, I would say a little bit too high. Probably if any volatility comes down the road, then it might raise my attention and conviction to actually look deeper and to consider whether to add it to my portfolio or not. So there you have it, my opinion on the valuation and how the company is run. And that's it for Kawan Food as of today. Thank you, and we'll go to the comment section and the questioning part. But I got to say though, this is a company that is very rare. They run a manufacturing business, and it's really rare to come across a manufacturing company that don't run using debt. I think of so many companies we covered, really rare. Yeah, I don't know what are your thoughts. Do you think the company has been managing their cash flow well? Sean, this is a manufacturing company we're talking about, and very relatively little to no debt.
Yeah, so again, if we look back, I think the company is quite cash rich, as you explained before. They finance themselves for the new plant. So this is very different from like Mr. DIY that we spoke about 2 weeks ago, where the IPO money is entirely to pay off debts and loans, right? So yeah, it's a very different kind of company, I would say.
But Chun Ming, do you like how the company is run, manufacturing but little to no debt?
Personally, I won't be interested in a way, because of they didn't leverage enough, in my opinion. You build up your profit portfolio for so long, and then you spend. I think this is quite traditional in a way, but you're already a listed entity, and then your fundraising capability should be much higher. I mean, if you wanted to go to bank and get loan, all those stuff,
Yep.
it should be quite easy for you to get. Not very high interest because you are reputable and so on. But they didn't choose to do it. The only time they can reflect their value is during pandemic. I mean, during economic downturn, then they really perform well. But other than that, if let's say economy start to recover and they maintain this thing, then this will be a very boring company in my opinion, because they will continue to stay slow and steady. But the best part is slow and steady. So it will be resilient. It won't suddenly drop overnight or over a few quarters. It definitely very stable. So if you for me personally, I won't be very interested in my personal opinion. But then they are good in certain way. I think we can take
So,
some
yeah.
question. A lot of comment from Darren. Don't eat so much Maggi mee. I don't think. I think frozen food is better than Maggi mee. Perception, I don't know. Perception, I think Maggi mee is the worst.
Yeah, I think maybe you're right, because Maggi mee is very niche. Maggi mee is just straight heads on targeting the instant noodle. Whereas frozen food, you can have frozen meat, you can have frozen vegetables, you can have frozen pao, frozen dumplings. So of course, from a nutrition perspective, definitely more nutrition. Unless you tell me, okay lah, I cook my Maggi mee, I put in eggs, I buy eggs from QL, I buy vegetables and I put it in. But you won't be able to eat Maggi mee for every day lah. That would be just the thought about taking instant noodles every day also just freaks me out. Frozen food every day, but different kind, still reasonable. Right. And nutrition wise, definitely more better value than instant noodles. So yeah, I think we have a comment from Sonny saying that yeah, they are also loyal brand of KG, and I would say so. I think back then I also bought KG brand pastry, spring roll pastry, when for my mom or for my grandma. So yeah, I think Sony is a Kawan food fan. Basically, she's quite spot on with all the product brands and the functionalities of all the sub brands under Kawan. So good for you, and I hope you find Kawan food the way the company is run is quite well run. And if you are interested, you can further study this company. So Leong, yeah, hi. WY Tan is asking Q3 why slow, not out yet. I don't know. I think Q2, Q3, whatever Q it is, just for a company running a business in these tough times, sometimes they just need more time when it comes to finalizing their quarter reports. I think over here in Singapore, there are still companies that is delaying their Q2 reports because there are a lot of stuff that not quantifiable, and they are unable to, publish it out black and white and formalize it. So, but if you look at the company's business model, this company will not delay their quarter reports because of any other risk. You want to say the company is in debt? Not true, because the debt is so low only. You want to say the company business is not doing well? It's also not true, because at the height of the pandemic of Q2 2020, the company still actually can grow. So I think it could be other reasons, but it wouldn't be a huge boom for retail investors that this company can suddenly go that wrong. So yeah, next. Normally high PE always have low dividend payment. Mathematically, I would say yes, because your company is trading at a higher share price, that makes the PE go high. And if your share price run ahead of your earnings per share, and if your company is so well run that it doesn't pay dividends per share more than earnings per share, yeah, that would normally be the case. High PE companies would usually have a low dividend payment or lower dividend yield would be a more correct answer. Doesn't mean that high PE companies will have low dividend payments in terms of DPS. Maybe just because the share price run ahead doesn't reflect the growth potential in terms of earnings and also the dividends. So don't let valuation cloud your justification or judgment of the company. So next, JW. Hard to predict if sales can pick up in Malaysia as people will become more health conscious, but rather they might do well overseas as it is a unique selling point. Yes, I would agree with you. I would want to see more contribution, more growth percentage from Kawan Food's export market if I want to make Kawan Food a more solid investing choice. Next, in terms of growth, is QL have more growth compared to Kawan? I think both companies have their own niche category within the frozen food segment. So yeah, basically you cannot just say who will grow faster. It also depends on how aggressive both companies wants to actually fight for sales. If a company wants to fight for sales aggressively, they might intensify their presence in the online segment. So maybe this company list their products on Lazada, on Taobao, or on all the available online platforms for sales. And you frequently see that this company has promotions online. And sometimes the company will share with you, oh yeah, I did this amount of sales and how many portion of it comes from online. So you can see the online segment is growing faster, then you can actually make a guesstimation or well-educated guess that this company is putting a lot of effort, emphasis in growing the online space. And that might actually be the trump card in terms of comparing the growth between QL and Kawan. But just from a very layman point of view, I think both companies can continue to grow further. Just how fast they want to do it and by how by what means what are the channels they want to do it . Okay, the next one, I see something related to growth. Hi guys, is it possible to do an analysis on Supermax? Chuming, do you want to do a deeper dive into growth, or Sean, do you want to relook into growth now that we are in Q4 of 2020, where most of the good results have been factored in, but maybe we should look into whether the company can still continue to grow moving forward. Yeah, I think we might do it. Yeah.
But I think when we
what
do
are your
it,
thoughts?
we might do it on a different way. We might do comparison if you were to do it.
Yep.
Because the business itself is quite straightforward. A lot of people might not know about glove, but now everyone will, if you're into this market, you should somewhat read about it. So it would be hard for us to do a deep dive, and it might not bring a lot of value. So I think comparing side by side would be a much more meaningful one. But I wanted to add on to the QL versus Kawan. I think QL, the risk is because they have multiple segments, in my opinion, because palm oil, eggs, and also the frozen food segment is quite different. Of course, they're trying to do the end-to-end business model where their family mart will be the consumer of their own product. This is very positive news. But unless all these things grow concurrently, else there always will be a chance that they are using some profit margin from, let's say, palm oil to cover the egg one. And it will always happen. Because between egg versus palm oil and versus frozen food, it's not a deep link. Only the frozen food part, the surimi part, all those things is linked to the family mart. But the rest is independent. And we have been seeing it. They're taking the left pocket, call the right pocket. So that's why, even though it's very promising in terms of growth story when you take along with Family Mart, but then this might be the drawback. But I will reserve my comment on Kawan because maybe people who slow and steady ultimately will be the winner compared to the people
True.
who leverage a lot.
But yeah, I think when you just bring up QL and also Kawan and you want to compare the growth side by side, maybe I would like to ask Sean's opinion as well, because as you see, QL is also in the business of poultry, raising chicks and chicken meat. So from a microbiologist point of view, QL is also a company where it is susceptible to bird flu, this kind of risk, right? And coincidentally, companies like Kawan Food is doing frozen dough. They are buying wheat, and this is not a product that gets infected by viruses or bird flu, this kind of pandemic kind of disease and sickness. So does that mean QL has a additional risk if you compare it against Kawan Food?
Yeah. So I don't know if there were any proven reports where you can get bird flu or swine flu for the example by consuming these products. But yeah, definitely there's a risk because when there's bird flu or swine flu, then people tend to stay away from it a bit more, right? But again, I guess every business has a risk. So if you're talking about Kawan Food, then the raw material for their wheat and all that stuff, it could be dependent on weather factors, for instance, or even wheat can get attacked by the plant-based kind of viruses that will affect raw material, which will increase their prices. So yeah, I guess the long answer short is every businesses has a risk. It's not apple to apple comparison, so it's quite hard to say.
Right. So that's an interesting point of view. So yeah. Next, JW saying that Kawan does not command a strong necessity demand like Nestle. Yes, I would kind of agree with you. Basically, if you go to the store, you want to buy prata, you need to buy frozen prata or frozen roti. And so unluckily, Kawan Food brand is out of sale. So what do? You still need to satisfy your urge. You just grab probably the next available brand. So there is little brand loyalty to frozen dough products. But Sonny might disagree with you. She looks like a very staunch fan. So I think, but you look at it on a bigger scale. Yes, the brand loyalty and brand equity that Nestle commands is definitely more than a company like Kawan and also QL. But yeah, this is also they are still growing. Maybe give them a bit of time. Maybe the next mega brand from a local company could be a brand from Kawan Food. So sometimes it's not just arriving at the current situation that dictates the future. It's rather than can Kawan Food actually grow their current brand into a big brand like Nestle in the future. So then it only makes investing more interesting because you're not judging the company based on today, but on the future trajectory and the future potential. So that's what makes investing so much more interesting rather than comparing what they are today side by side. So do you think Kawan Food will benefit from upcoming Olympic season catering for Muslim consumers? Don't know. Chubing, you think so? Will Kawan Food actually become a key supplier to Olympic?
Personally, I would say no, in a way, because their current portfolio don't have a lot of reach in Japan. And of course, the next Olympic happened in Japan. So I don't think you'll have a very good growing factor to them, in my opinion. I don't think so.
Okay. So yeah, so we move on next. Is the next topic Ajinomoto? The next article that we cover, that we refresh, will be Ajinomoto. So we are in the midst of preparing it. Will be out my next week, Ajinomoto. So we can share the article first, but if you still want Ajinomoto to be presented live as a late night show, then let us know. But yeah, I think the article would be quite comprehensive already. Stay tuned to the article next week. So someone is late. And Mr. DIY QR, any comments? No yet. Maybe let us go through later, and maybe you'll update first next week. You catch us next week, and maybe that time we might have already go through the QR report. But from the news I see, is a good QR report lah. So just need to know in more detail what are the factors that make it good, and is it something that can be stuck on, or is it just one off? Yeah, I need to look into that. I haven't looked into the QR report yet. So yeah, been looking to get some Kawan as well. Good growth potential. So you see, there are people out there who are also looking at Kawan Food as a good investment opportunity. It's a good business, and the company is just very well run. Olympic will benefit Carlsberg, Heineken, and Magni. Yeah, I'll leave it to you guys to do your research and due diligence on what are companies that are more beneficial proxies to the Olympic. But for me personally, I want to buy a company that doesn't really rely on any proxies, just because day in, day out people are using it. Doesn't really rely on one-off issue, be it the presidential election, be it Olympic, or be it FIFA World Cup. This is just one-time earning. I don't like one-time earning. I want forever and ever that kind of earning potential. So yeah, MSG, yeah, Ajinomoto company. Ajinomoto will be out as an article next week. So stay tuned. We will share it out, and yeah, if you have anything, you can ask us in the comment section, or if you want it to be a not so late night show, let us know also. We can actually make it too. But yeah, I think you want to actually pick another company, because like this you can actually get to hear more comments and analysis from us. So don't repeat the not so late night show and also the article. So yeah, I guess that's for it today. As always, thank you very much for spending your Thursday with us, Thursday night. Of course, there are a lot of companies pending in the watch list that we have to cover, but rest assured, 2 weeks time we go back to tech. We'll talk more about tech. Then we'll also try to look out of the tech and food as well. There are so many companies listed, and we also want to find the opportunity to share not so good companies with you all, so that you know what to look out for, and you don't buy into a company where it's a pitfall. You can actually fall into their trap, and that's where you actually pick the wrong company to invest. So one of these weeks, we might pick a not so good company, and then yeah, hopefully you guys can actually see like how good companies are run and not so good companies are run. But yeah, the cases in Malaysia is still not very positive in the numbers. Still very high. I think today is still 3 digits or 4 digits to make. So it's still at 4 digits. So just stay safe, guys. Just do your due diligence in terms of the SOP. Try not to go out. Try not to go to the crowded areas. And yeah, we'll catch you guys real soon. Same time as always. Next Thursday, 9 p.m. to 10 p.m. And yeah, take care. Stay safe. Bye-bye.
Thanks. Bye.